I wanted to make this to talk about some lessons and things I've learned and what I want to do differently in regards to investing in the current bubble, and just looking back at when I kind of made a decision to try to have a thesis and decide that things were getting to the overvalued point. And so I'll just lay out the whole timeline and then kind of what I would do differently if I could go back and kind of where we stand now. So back in December 2025, or like fall that time, I felt like that everything was getting to pretty hyped stage, pretty overvalued stage. And I also looked at some timelines. Now, timelines are not super useful because just because if you look at, let's say, the dot com bubble burst, that thing took about like, roughly 4 to 5 years, maybe it could be 6 years or so, because it popped, I think, around like 2001 time. And the problem though with like using that kind of thing as data is because there's a lot of different factors. So each time that we have a overhyped situation, you get to the point where like there's other factors that can cause it to play out differently. So sometimes things pop quickly, sometimes they last a while, and it's really hard to make that distinction. So at that time, I thought that things were heating up pretty much, and I was going to kind of be a bear and say that I would take the long term view, buy some kind of, out of the money puts and stick with them and have them expire in like 2028. So I figured that at that point, the risk reward ratio of 3 years and of stuff continuously like going up for 3 years, I was willing to take that risk versus things going down. At that time, there was no war or anything going on. And that was something that I just thought was like made sense. And that was purely a just AI narrative of this was, I think, this was actually before I think I read that book about the dot com bubble bust, but you see a lot of like parallels, and just the belief that OpenAI is going to be the best company in the world going forward was just not really in my mind. So what should I have done differently? So from that point to now, right, we've actually seen a humongous rally. And so I think what we've entered in this stage is the part where nothing makes sense, right? We're at the point where there is the, I don't know how to describe this, but the top of the market is going to be blown off. And when I say that, I mean it's going to keep going up for a while. And I predict it may even keep going up until, December of this year. Who knows? Depending on what the Fed chair does. And if he cuts interest rates, things are going to be in a bull market probably for a while. Now, of course, this war situation is complicating that, but I think in retrospect, what I should have done is I should have done two different things. One, I shouldn't have entered the market at the same time. So I actually started with a precious metals bet. So I actually just decided to mainly sell stocks and then just hold cash and then buy gold and stuff. And it wasn't until I got into the options game, probably like January or February or so. And the interesting thing was I was trying to learn as much as I possibly could from like high quality YouTube videos before making stuff, because I was still trying to learn about all the Greeks, all those different factors that lead into stuff. And like, so I think that was like a issue as well, which is something I should have taken slower. But I think I should have just staged entry, because I think if I had done that, maybe I would have realized that if you think about it, right, like if you're buying puts, right, the main thing that matters is volatility, right? So if volatility is low, they'll be cheap. If it's high, they'll be expensive. So you want to wait for periods of low volatility. And I thought that when, because if you remember in February, right, we were constantly, the S&P 500 was trying to reach that 7,000 line, and it hit it once and then came back down and tried up again and went back down. So I took it as like, wow, people are just really like selling and it's like kind of bad. And there's a point when actually some of my stuff I bought was actually in the money because of how far back everything was getting pulled. And then now the fact that we've confidently crossed the 7,000 barrier just shows that we're in like what I would consider delusional territory, right? Where things are just going past any reality, right? And so I think it's very difficult, because you want to, like in that situation now, if I were to buy those kind of, let's say, put, they would actually be cheaper because the distance from them now has risen because the stock has gone up so much. And I think it's really important to keep in mind a very famous saying by, I believe it was Druckenmiller, who's a very prominent hedge fund, and he was saying in the .com bubble burst, he was like, I think he had like 3 hours from the peak, from that point when everything turned, everyone started selling, right? It was like 3 hours. And so he had already sold like the week before, but one of his friends was just like in the market still and making like a lot of money, right? And he just told himself, no, I'm going to sell, I'm going to sit. And he tried to sit, and then eventually couldn't take it. And then so he bought. And then at that point he bought, then he just lost like 3 billion in one day, right? So I think that's a really important consideration, is like, and he says this again and again, there wasn't anything to learn because he already knew he shouldn't have done it, right? But it's just that when you get, it's just with anything, right? When you get provoked enough times, your willpower starts to degrade. And therefore you just have this idea that you should do something. But I think in this case, I should have actually played a little bit more, a little differently with the strategy, because I think the reason is because when you buy leaps, right? Leaps are very long dated. So you always have the time. So in a sense, your loss is relatively minimized because there's still time in it, right? If you're buying, let's say, expiration of like this month, right? If it doesn't get anywhere near that in time, you're donezo. It's going directly to zero, right? But if let's say there's still 2 years on it, you can still recoup some of the value if you need to exit. And so because of that, I think it's actually, if you, let's say, if I were to go back in time, right, and I still wanted to play the bubble thesis, what I would do is I would still buy the puts, but I would try to buy, I would also buy calls that were in the money, because the idea is, if you think about, if we go back and we just think, and obviously it's hard because you don't have perfect insight that everything's going to keep going up that time. But if you had both of those things, right, let's say, and you had, like, you bought at the money for puts and calls and puts. And then by now the puts, right, would be like severely degraded in value, but you still have 2 to 3 years for those to play out. And the calls would have gone up a bunch. And now you can actually reshift your portfolio and say, okay, we're going to sell some of the calls. As long as you have, let's say, a certain benchmark for when you can exit, right? If you say, oh, I'm 100% gain, you're going to exit some of the position, and then 200% gain, you exit some. So you sell some. And then now you can recoup that and then rebuy more puts, so that way you're at more staged, right? Instead of being, because like right now what I'm at is like, this is the level I need it to hit for there to be a return on anything, and currently it's like all the way up here, right? So if it goes down here, I still don't get anything. But if I had done that, right, I would have been at the point where I could go up there and then buy more puts, and then now if it even goes down here, I'm already in net green a little bit. So I think that was one big thing I should have done. And I also definitely underestimated kind of the bubble narrative, of the sense of like, it has so much higher to go. And it's really difficult because, the problem is, like, in this situation, those big, funds, they control the entirety of the market, right? It's like a tsunami that's coming, and you're just like a little kid splashing in the water, right? So you're not going to be doing anything, and then you just completely get rocked by whatever they do. And there's also the amplification effect of like margin call or short squeezes, right? Which is just pretty much where people sell and they have to sell more, and then you have this never ending cycle of selling, right? And as such, right, when things go up, they go up a lot. When things go down, they go down a lot. And so like what we're going to see is we're probably going to see stuff go up a ton more. And I think that because this is not like, stocks, this is like options. So there is limited downside in a sense. And I think it makes sense, and I would have been able to catch more of that upside on the way up. Of course, in hindsight, right, it's super clear that I should have done this, but it's very unclear at the time because there's a lot of stuff going on, right? And but I just think that it's a good idea to do something like that when you have a situation that you're very sure is a bubble and you still want to play it, right? Then you just got to err on the side of time. Because if you think about like what would have happened, right? In the sense, like, let's say if you go a couple years earlier to the very beginning of the bubble, right, where it's not really a bubble yet, then you would have to realize that it's at the beginning stages of the bubble. I think you can determine, like, let's say first half, second half of bubble. I don't think you can do anything beyond that, to be honest. Like, you can't really predict what's going to happen, because like what will eventually happen is the market will go from not reacting to news at all, so it's so bullish that like even if there's any signs of cracks, it just ignores it. And we're still at that stage now where stuff is still going up, even though there are definitely some signs of cracks. But again, it's like if nobody's paying attention, it doesn't matter. Then it'll get to a point where it's at a very delicate situation, and then one crack will appear, and that crack will be just like all the other cracks. But for some reason, people pay attention to that crack more, and it causes this downward momentum to build. So my point is, like, you can kind of tell it's the beginning of the bubble just because using, let's say, the time that OpenAI gets started, right? Using 2022 as a benchmark, we can use that as a kind of back test benchmark for when this thing is starting, and then realize that, okay, if we say first half should have been 2022, 2024, pretty much, right? And that should have been the first half of it. And then if that's also the time when typically you see people get making like millions and like dollars, right? They're retiring. That was how a lot of people did Nvidia, right? And then second half bubble is kind of like, it's been around for a couple of years and we start to see a little bit of cracks. It doesn't mean it's gonna go down, but we're in the second half of it. And so I think that is something you could play. So if you're in the first half, right, you want to make sure that you're not actually extremely like short, right? So this is really my first time, dealing with a bubble and dealing with an actual leaps trading strategy. So it's experience is the best teacher, but the truth is you want to read as much as possible and learn. Experience is the best teacher, but it's not the optimal one. You don't want to experience everything to learn, right? You want to know stuff before you do it. But I think this is very valuable in me going forward, because I think any time I'm in another bubble, I'll be much, hopefully, as long as there's options to trade it, right, I'll be much more prepared. But we'll see. So I think those are just some thoughts I had. And I mean, where we're at right now, we're still short a lot of stuff, right? We're still net negative a lot of stuff. I think the one cool thing that would be nice is MicroStrategy. It seems like there's some cracks breaking with its recent earnings report. They had some very large negative unrealized gains. So we are very heavily in a position against that. And so we have a lot of leverage in there too. So I think that's a pretty good play. But yeah, I think another thing too is I maybe I should have gone a little bit less in the number of positions I have. I think I have like 6 to 8 or so. But I mean, only time will tell, right? So I think I made, in my opinion, a pretty well-informed decision at that time. It was mainly just based off a balance sheet, right? I was looking at these companies with very, very negative balance sheets with a lot of promised spending. I was noting their exposure to OpenAI and how OpenAI doesn't have actually that great revenue and how the spending is going up by a lot. So like, for example, I wouldn't dare touch Microsoft. I wouldn't dare touch Google, right? I would not like be shorting those, because like what's going to happen is there's going to be a broad sell-off eventually, and that sell-off will encompass all these high quality stocks as well, right? Including Amazon, Meta. I wouldn't touch those because they have defined sources of income, right? Like what I'm trying to kind of match onto history, and again, this isn't perfect, but pretty much Netscape is OpenAI / potentially Nvidia, but probably more OpenAI, right? And then Microsoft is Microsoft and the .com bubble, right? Because Microsoft still did well, and was able to actually beat Netscape. And like my thesis is really the same. It's just actually been proven more and more. The reason why I'm short Nvidia was because the idea that its market share is going to decrease over time and is no longer going to be the poster child, and you start seeing other people develop their own chips, right? And then you also see the capacity problem. So that hasn't changed. I'm very cautious about Oracle just because Oracle is heavy like negative spending, and requires a bunch of money from OpenAI. So if OpenAI doesn't materialize, it could be a potential domino effect. And I'm like also like short a lot of other smaller ones, like Nebius, right, Iron, these kind of situations. So I think it's going to be interesting to play out, and you have to have really, really good patience. I think the thing I've kind of accepted at this point was I'm doing this because I want the experience. For me, losing it is worth the experience. And that was a distinction I made. It doesn't mean I'm not trying to, get a return. I'm trying to aim for, I think, at least a 10x, overall. I know that's very ambitious, but we'll see what happens. And I think in the process, I'll learn a lot, and that will help me improve my kind of future understanding of how to do things, how to enter into stuff. And I was willing to take the risk because I was like, I'll pay for the next 3 years, I'll do it because that's something that I think is worth it. And we all know that these situations don't come all the time. So, yeah. And I guess I'll just end with some future projections. So right now, what's currently not being priced in is the whole problem with oil, right? And I'm sure you can, if anybody has a brain on their head knows that this problem's not going to resolve itself. There's not going to be any sort of magical peace treaty or anything like that that's going to materialize, right? It's going to end in war and blood, and it's going to end with oil prices probably going through the roof. And even if they don't, the current lag in oil prices is still going to hit the consumer very hard. We're having job losses across the board just because all these tech companies decide that they want to just fire people. I don't know exactly why, but maybe it's to cut their bottom line, make everything look like they're a crazy spending is more in line. Yeah. And so as a result, right, I'm predicting probably next year, March, things will start hitting the fan because you'll have a lot of the lag in food prices probably rise. Gas may also be very high at that time. And then all of a sudden that's the input cost. And now all of a sudden people can't pay for things. They can't go places. And then you start having like, kind of recession talk. And so we'll see. But yeah, it definitely requires a lot of patience. That was another thing I wanted to do. I wanted to do this just because I knew it would test my patience. And I was like, even if it goes zero, I know I've been very patient and it's hard. I'm telling you, it's so hard. I think Michael Burry, the guy from Big Short, said this in an interview. He was saying he wished he could have gone to sleep and just woke up in like 2008 when everything went south. Because it's hard to wake up every single day and like, what am I doing? I'm literally being tempted every time I see the market's green. Every time you see the market's green, you're just tempted. You're like, dang, I should have done this, And I think to an extent, I probably should have, right? But I don't think you should just go start buying everything now because it's very difficult to predict the future, right? I think the only time that you're able to really predict stuff is if you extend your horizon, your time horizon, to beyond at least 1 year, 2 years, right? The farther out you get, the more confident you can probably be of something. But yeah, you have to remember that it's always easy to look back in hindsight, but nobody's listening. Nobody's listening right now. Nobody's listening, right? And so what will happen is whenever stuff hits the fan, people will look back and people say, oh, wow, like you were trying to tell us. Well, it wasn't just me. It was a lot of people trying to say stuff, but nobody listens. And it's fine. But that's just the way things are. So if you pay attention, it's not even paying attention. If you just make your own decisions about things, you'll be in a much better place. So that's it for now. And I'll update you later when stuff changes. Although it probably won't until December. We'll see.